Hello and welcome to this video on global oil markets. In this video, we will be discussing the importance of oil in the global economy, how oil prices are determined, and a variety of other related topics. Oil is one of the most important commodities in the world, and it plays a crucial role in many different industries. It is used in transportation, manufacturing, and electricity production, among other things. In this video, we will provide an overview of the global oil market, including its history and current status, as well as the major players and trends that impact it. We will also discuss the impact of oil production and consumption on the environment, as well as the geopolitical factors that can impact the oil market. We will also examine the impact of the COVID-19 pandemic on the global oil market, including the effects of lockdowns and travel restrictions on demand for oil, as well as the long-term outlook for the industry. Additionally, we will explore the future of the oil market, including the potential for a shift towards renewable energy sources and the impact of climate change on the industry. Finally, we will discuss possible solutions to the issues facing the global oil market and provide our final thoughts on the future of the industry. Thank you for joining us, and let's get started. The global oil market has been a critical component of the world economy since the late 19th century. Today, oil remains one of the most important energy sources, accounting for around 1/3 of global energy consumption. The market is influenced by many factors, including supply and demand, geopolitical tensions, and environmental concerns. Oil prices can have a significant impact on other prices in the economy. When oil prices increase, it can lead to higher prices for goods and services that require energy to produce, transport, and distribute. This can lead to inflation and can impact the cost of living for consumers. For example, an increase in oil prices can lead to higher gasoline prices, which can impact the cost of transportation for individuals and businesses. In addition, oil prices can impact the stock market and the value of currencies. When oil prices increase, it can lead to lower stock prices for companies that rely heavily on energy, such as airlines and transportation companies. It can also lead to a weaker currency for countries that are heavily dependent on oil imports, as they need to spend more money to purchase the same amount of oil. Conversely, when oil prices decrease, it can have the opposite effect on the economy, leading to lower inflation and potentially boosting consumer spending. The modern oil industry began in the mid-19th century, but it was not until the early 20th century that oil became a major energy source. Since then, the industry has grown exponentially, with the United States surpassing Saudi Arabia and Russia to become the world's largest oil producer in 2018. Today, China is the largest importer of oil, followed by the United States, India, and Japan. The Organization of the Petroleum Exporting Countries, OPEC, which was formed in 1960, controls approximately 40% of the world's oil supply. The global oil market has also been impacted by the rise of renewable energy sources and the COVID-19 pandemic, which led to a sharp drop in demand. The price of oil is determined by supply and demand factors, as well as geopolitical tensions and environmental concerns. When demand for oil exceeds supply, prices rise, and when supply exceeds demand, prices fall. Geopolitical tensions, such as trade disputes, sanctions, and military conflicts, can also impact the oil market. Additionally, concerns about the environmental impact of oil production and consumption have led to increased efforts to transition to renewable energy sources. Oil production and consumption are two crucial factors that significantly impact the global oil market. In this section, we will discuss the top oil producing countries, how oil is consumed globally, and the impact of oil production and consumption on the environment. The United States became the world's largest producer of oil in 2018, surpassing both Saudi Arabia and Russia. Other top oil producing countries include Iraq, Iran, Canada, and China. The production of oil is a significant source of revenue and employment for these countries. China is the world's largest importer of oil, followed by the United States, India, and Japan. Oil is used for various purposes, including transportation, heating, and electricity generation. The transportation sector accounts for the largest share of oil consumption, followed by industry, residential, and commercial sectors. The production and consumption of oil have significant environmental consequences. Oil spills and other environmental disasters caused by oil production and transportation have had devastating effects on marine life and ecosystems. Furthermore, the combustion of oil releases greenhouse gases into the atmosphere, contributing to climate change. In conclusion, understanding oil production and consumption is crucial to understanding the global oil market. The impact of these factors on the environment must also be taken into account as we move towards a sustainable future. Geopolitical factors are a significant driver of supply and demand in the global oil market. One of the major players in this arena is the Organization of the Petroleum Exporting Countries, OPEC, which was formed in 1960 to coordinate and regulate oil production among its member countries. OPEC produces over 40% of the world's oil and has a significant impact on oil prices. Recent events have shown how geopolitical factors can impact the oil market. For example, U.S. sanctions on Iran in 2018 resulted in a reduction in oil supply from the country and caused oil prices to surge. Similarly, in response to a global supply glut, OPEC cut oil production in 2016 to stabilize oil prices. Venezuela has also been impacted by U.S. sanctions, which have led to a reduction in its oil exports. Geopolitical tensions can also lead to price volatility in the oil market. For instance, ongoing conflicts in the Middle East, particularly the tensions between Iran and Saudi Arabia, can disrupt oil supply and lead to price spikes. The recent tensions between the U.S. and Iran have also raised concerns about the potential disruption of oil supplies in the Persian Gulf. Furthermore, the U.S. shale revolution has challenged OPEC's dominance in the oil market. The shale revolution refers to the combination of hydraulic fracturing and horizontal drilling that enabled the United States to significantly increase its production of oil and natural gas, particularly from tight oil formations, which now account for 36% of total U.S. crude oil production. The United States became the world's largest producer of oil in 2018, largely due to the shale revolution, which has given the U.S. greater influence over global oil prices. It is crucial for stakeholders in the oil market to understand these geopolitical risks and incorporate them into their decision-making processes. Geopolitical factors are likely to remain a significant factor in the global oil market in the foreseeable future, and the use of oil as a geopolitical tool by major players such as the US and Russia is likely to impact the market as well. The COVID-19 pandemic has had a significant impact on the global oil market. Lockdowns and travel restrictions led to a decrease in demand for oil as people stayed home and transportation was limited. This caused a significant drop in oil prices, with the price of crude oil dropping to negative values for the first time in history in April 2020. As lockdowns have eased and economies have reopened, demand for oil has increased again, but it remains below pre-pandemic levels. The pandemic has also affected the long-term outlook for the oil market. The International Energy Agency predicts that demand for oil will continue to grow until at least 2040. But the pandemic has accelerated the shift towards renewable energy sources. Many countries have announced plans to phase out fossil fuels and transition to renewable energy in the coming decades. This shift could reduce the demand for oil in the future and have significant economic and geopolitical implications. In addition, the pandemic has highlighted the environmental impact of oil production and consumption. With reduced air travel and transportation during lockdowns, air quality improved in many cities around the world. This has led to increased awareness of the need to reduce greenhouse gas emissions and transition to cleaner energy sources. The Paris Agreement, signed in 2015, aims to limit global warming to well below 2 degrees Celsius, and many countries have set targets to reduce their greenhouse gas emissions. Overall, the COVID-19 pandemic has had a significant impact on the global oil market, highlighting the need for a transition towards cleaner energy sources and reducing our dependence on fossil fuels. The long-term implications of this shift for the global economy and geopolitics are yet to be fully understood. As we look to the future of the oil market, one of the most significant factors to consider is the shift towards renewable energy sources. The use of electric vehicles and the increasing adoption of solar and wind power has the potential to reduce the world's dependence on oil. This could result in lower demand for oil and a corresponding decrease in prices, affecting major players in the market. Another important factor to consider is the role of oil in international trade, particularly the dominance of the US dollar as the currency for oil transactions. This has given the US a great deal of influence over the global oil market, but as more countries shift towards renewable energy sources, we could see changes in the global economic landscape. Finally, we must also consider the impact of climate change and the need to reduce greenhouse gas emissions on the future of the oil market. The Paris Agreement, signed in 2015, aims to limit global warming to well below 2 degrees Celsius, which will require significant reductions in the use of fossil fuels like oil. This could lead to greater investment in renewable energy and alternative fuels, further reducing demand for oil. In conclusion, the future of the oil market is uncertain. While demand for oil is expected to continue to grow until at least 2040 according to the International Energy Agency, IEA, the rise of renewable energy sources and the need to reduce greenhouse gas emissions could result in significant changes in the global oil market. It will be important for major players in the market to adapt to these changes and consider alternative sources of energy to remain competitive. As we have seen, the global oil market is facing a number of challenges, including environmental concerns and geopolitical tensions. However, there are a few possible solutions that could help address some of these issues. One solution is to invest in clean energy technologies that can help reduce the environmental impact of oil production and consumption. For example, carbon capture and storage, CCS, technology can be used to capture carbon dioxide emissions from power plants and industrial facilities, and store them underground. Another solution is to transition towards more sustainable transportation options, such as electric vehicles or public transportation. This would help reduce the demand for oil and lower greenhouse gas emissions. Geopolitical tensions can have a major impact on the oil market, as we have seen with recent events such as OPEC production cuts and US sanctions on Iran and Venezuela. One possible solution is to promote diplomatic efforts to reduce tensions and improve international relations. Another solution is to diversify the sources of oil imports, so that countries are not overly reliant on any one supplier. This could help reduce the impact of geopolitical tensions on the oil market. Overall, it is clear that the global oil market is facing a number of challenges, but there are solutions that can be explored to address these issues. It will require cooperation between governments, industry leaders, and consumers to make the necessary changes to ensure a sustainable future for the global economy and the environment. In conclusion, the global oil market is a complex and constantly evolving industry that plays a critical role in the global economy. From the top oil-producing countries to the impact of geopolitical tensions, the COVID-19 pandemic, and the shift towards renewable energy sources, there are many factors that influence the oil market. As the world continues to grapple with the challenges of climate change and reducing greenhouse gas emissions, the future of the oil market remains uncertain. However, with the Paris Agreement and other initiatives aimed at reducing the environmental impact of oil production and consumption, there is hope for a more sustainable future. It is important for us to stay informed about the developments in the global oil market and to explore potential solutions to the challenges facing the industry. Thanks for watching. Don't forget to like, comment and subscribe, and we'll see you in the next video.